Welcome to the Friday edition of the Tech Stocks Daily Podcast. Buckle up because today we're diving into some spicy stories rocking the NASDAQ world. Get ready for the drama with AppLovin's as they navigate a storm of lawsuits over alleged ad dupes. We'll unravel the sizzling investigation into CrowdStrike's eyebrow-raising IRS deal. And just when you think it can't get any better, we'll beam into Telesat's upcoming financial reveal and their game-changing satellite innovations. Plus, discover VEON's billion-dollar plan to boost Ukraine's connectivity alongside airspan networks. It's a roller coaster of legal upheavals, financial mysteries, and tech progress. Don't miss a minute. What's shaking in the tech world today? It's time to slide into the high-stakes drama swirling around AppLovin Corporation. This mobile technology company, known for its digital advertising prowess, has found itself in a legal hot soup lately. Let me break it down for you. AppLovin is facing a storm of class action lawsuits alleging securities fraud, and several top law firms are hot on its tail. We're talking about companies like Levi and Korsinski, Lowy Dannenberg, and Bragar Eagle and Squire leading the charge. These heavyweight legal teams are rallying to make a case for the investors who believe they've been led astray. Now, what's the kernel of the issue here? Apparently, it all centers around AppLovin's much-vaunted Axon 2.0 digital ad platform. This upgrade was sold to investors as the bee's knees in digital ad technology, allegedly boasting fresh AI innovations and venturing into web-based marketing and e-commerce. The company's top brass touted impressive financial gains, claiming they were surfing the wave of technology's cutting edge. But here's the curveball. On February 26, 2025, analysts dropped some spicy research revelations that claimed wrongdoing on AppLovin's part. According to these research analyses, AppLovin was allegedly using jaw-dropping manipulative strategies by exploiting advertising data from none other than Meta platforms. Yes, the Meta. We're talking about super shady maneuvers, like click-through inflations, and tricking downloads through methods as crafty as a magician's sleight of hand. Not only were these claims calling into question AppLovin's honorable intentions, but they also took the sparkling shine off its reported stock performance, forcing the shares to nosedive significantly, from $377.06 down to $331 overnight. Talk about a reality check, and that sounds like just the beginning. To date, lawsuits have been plunging into the action from all corners. Levi and Korsinski and Lowy Dannenberg are on the front lines, seeking restitution for affected investors. Each law firm accuses AppLovin of cooking the books, figures and metrics blown out of proportion, whisked into something that now more resembles a souffle collapsing. AppLovin investors who suffered losses, like a stomachache from bad sushi, between May 10, 2023 and February 25, 2025, specifically, are being encouraged to step forward before the May 5th deadline to toss their hat in the legal ring. Whether served via details about inflated ad numbers or multi-million-dollar results evaporating into thin air, these lawsuits aren't just fender benders in the digital fast lane, they're high-speed pileups in the stock market narrative. So what's the call here for AppLovin? Batten down the hatches and ready those legal defenses because this storm looks far from over. AppLovin reps continue to navigate the headlines, which, with each new lawsuit, heap more curious scrutiny on its practices. As new revelations emerge, we'll keep the updates coming, making sure you won't miss out on where this technological tale sails next. Hey tech enthusiasts, it's time to talk about the roller coaster ride that is CrowdStrike Holdings. This cybersecurity behemoth has had quite a week, and not necessarily the good kind. Let's break down what they've been up to and why investors are buzzing. CrowdStrike Holdings has captivated financial minds for quite some time, with its stock having outperformed the market substantially over the last 5 years, with a staggering annualized return of 44.58%. If you plunked $100 into this high flyer 5 years ago, you'd be looking at a cool $704.06 today. That's the power of compounded returns, baby. However, it's not all sunshine and rainbows for CrowdStrike right now. Recently, the company's stock shed 6% in just a month, bringing its year-to-date gains down to a paltry 7.9% from a healthier 31.6%. Talk about a rough patch. What's more, CrowdStrike is now in the murky fog of a federal investigation involving a questionable $32 million deal with Carahsoft Technology. The deal was reportedly set to deliver cybersecurity tools to none other than the IRS, but the IRS never actually bought anything. Oops. Naturally, wheels started turning about potential financial irregularities. The Department of Justice and Securities and Exchange Commission have swooped in, digging for clues like real-life tech detectives. The investigation is specifically scrutinizing whether CrowdStrike engaged in sneaky financial practices like pre-booking, which is when companies record revenues before they've actually, earned them. Not only could this situation roast their books, but it could also potentially lead to fines, legal expenses, or even tarnish their credibility. Adding fuel to CrowdStrike's currently raging fire are broader economic conditions. With the ongoing tariff wars and fears of a global slowdown, the entire tech sector is feeling jittery. CrowdStrike, being among the high-growth but slightly overvalued stocks, is even more vulnerable. Also, those pesky high interest rates are acting as lead boots, dragging down the entire tech industry. In a gut check earnings call earlier in March, CrowdStrike reported better than expected results for Q4 fiscal 2025, but dropped the ball on future guidance. Fiscal 2026 projections underwhelmed and rubbed investors the wrong way. It's a double-tap combo of rising costs and squeezed margins that has everyone worried. So weigh your options, folks. While CrowdStrike's still a giant in the cybersecurity space, its towering valuation combined with ongoing legal headaches and market fears suggests caution might be the best policy for current or potential investors. Keep those wallets tight, at least until the skies clear up. Oh, today's tech news spotlight is shining bright on Telesat. This Canadian satellite company is in the news because they have just announced their plans for the upcoming earnings conference call, scheduled for March 27th, 2025. Now, before you snooze at the thought of financial figures and dial-in numbers, let me tell you why this is a big deal in the satellite world. First off, Telesat is no ordinary satellite operator. Picture them as the James Bond of satellites, sophisticated, innovative, and always ready for the next mission. They're known for their advanced satellite operations and service reliability, making significant strides in global connectivity. They're like the Wi-Fi whisperers, truly tackling some of the globe's gnarliest connectivity challenges across telecoms, governments, maritime industries, and even the aeronautical sector. The upcoming earnings call will dissect Telesat's financial results for both the fourth quarter and the full year of 2024. Here's why you should tune in. This is the gateway to learning about Telesat's performance and strategy. Want a sneak peek into their profitability, strategy shifts, or perhaps a heads up on any exciting ventures they might embark on? This is where you get those golden nuggets of information. This event promises even more because of the exciting developments that Telesat is currently steering. Cue the drumroll for Telesat Lightspeed. This is their cutting-edge low Earth orbit satellite network. It's designed to redefine how we think about global satellite connectivity, offering high-capacity, secure, and resilient links that sprint at fiber optic speeds. Think of it as giving you lightning-fast internet in all corners of the Earth. Whether you're in bustling cities or the stark remoteness of the Antarctic, Telesat looks to bring you seamless connectivity. So what does dialing into a conference call mean for investors and tech enthusiasts alike? Well, this is your chance to hear firsthand from the brains of the Telesat operation, Daniel S. Goldberg, the president and CEO, along with Andrew Brown, the CFO. They'll walk through the numbers and field critical questions, which can unveil strategic moves and market adjustments that one might not catch solely from reading quarterly reports. For investors, it translates into having insights to trade confidently, armed with plenty of breaking news and analytical perspectives. It's like having insider knowledge without the legal repercussions. If you can't make the call, fear not. Replays will be available until April 10th, 2025, for those needing a recap. And in an age where data and connectivity have become as essential as oxygen, keeping an eye on Telesat's progress is essential. Whether you're a tech aficionado staying in the loop or an investor looking at new opportunities, this conference call is set to be enlightening, a wordy GPS for navigating the behemoth that is Telesat's business future. All right, tech enthusiasts, let's dive into why VEON is making waves in the tech news today. Picture this. VEON, a global powerhouse in the digital connectivity realm, is teaming up with Airspan Networks to supercharge Ukraine's communication infrastructure. This partnership is more exciting than a surprise software update that doesn't mess with your settings. VEON and Airspan have signed a memorandum of understanding to unleash cutting-edge network solutions designed to strengthen Ukraine's connectivity. If you thought Open RAN technology was just a tech buzzword, think again. This collaboration will focus on exactly those kinds of solutions, using Open RAN and air-to-land capabilities to boost network resilience, particularly in tough and challenging conditions. We're talking about a commitment from VEON and its subsidiary Kyivstar to invest a whopping $1 billion from 2023 to 2027. This is not just any pocket change. This is a sizable investment to ensure that Ukraine's digital infrastructure doesn't just bounce back, but transforms to new levels. The investment will focus on upgrading and expanding mobile networks with next-gen technologies, including direct-to-cell satellite connectivity. But what does this mean in terms of performance and business growth? Well, VEON isn't just being all talk and no show. Earlier this month, they reported a 4.7% hike in fourth quarter sales, driven by a whopping 42.4% uplift in direct digital revenues, with a substantial part of this growth fueled by their operations in Ukraine and Pakistan. They're not just investing in technology. They're also expecting a boost in local currency growth by 12 to 14% and an uptick in EBITDA of 13 to 15% in 2025. For those wondering about CapEx intensity, we're looking at 17 to 19%. These are not just numbers, though. They're a testament to VEON's confidence in its growth trajectory, and who wouldn't want to partner with Airspan Networks? With impressive credentials, like building the largest Open RAN networks globally and shipping over 1 million radios worldwide, they're a seasoned player in carrier-grade wireless networks. Together, VEON and Airspan are essentially crafting the blueprint for network solutions in environments where resilience is not just a preference, but a necessity. So to wrap it all up, VEON's expansion isn't merely about digital connectivity. It's about rebuilding and fortifying an entire nation's communication backbone. Ukraine's digital and ecological recovery is being bolstered by these innovations, which may very well serve as a template for similar initiatives globally. Now, what's your take on this tech-tastic collaboration? What are your thoughts on Open RAN technology and these mega investment moves? Jump into the comments section below and let me know what you think. Are you as excited as I am about these advancements paving the path for a more resilient digital future? Let's get the conversation started. All right, folks, let's dive into the exciting world of investment decisions. And today we're putting a magnifying glass on AppLovin's Corporation. The news above has quite a bit of spice, with the company tangled up in legal dramas over alleged securities fraud related to their Axon 2.0 ad platform. Let's unpack this for you. So would I sell, buy, or hold? Drumroll, please. If it were me, I'd consider holding AppLovin for now. Here's why. 1. Unresolved legal challenges. The news spotlight is hot with class action lawsuits alleging some pretty serious misconduct. Until these legal issues find resolution, they can cast a shadow over the company's stock and create unpredictable volatility. Number 2. Potential for elevated risk. With allegations of manipulation around ad platform data from a giant like Meta, and if proven true, we're looking at some possible existential risks to their business model. Such regulatory hiccups can spook investors and impact stock performance long-term. 3. Market sentiment and reaction. We've seen a sharp drop in AppLovin's share price following these revelations. Although the instinct might be to panic sell, stocks can be unfavorably affected by panic-driven market sentiment, and hasty decisions might mean realizing losses unnecessarily. 4. Technology potential. Despite the negativity, AppLovin's basis, as a tech and AI-driven ad company, still holds long-term promise if the storm's weather can be managed effectively. However, I'd want to sit on the edge of my seat and wait for more reports on how they're going to address and potentially resolve these hefty legal allegations first. For those investors who are looking for a bit of a thrill, with the understanding that high risk is packed into following tech stocks embroiled in lawsuits, AppLovin might hold intrigue. However, always remember, no two investors are the same, and it's crucial to do your own thorough research and risk assessment based on your financial goals and risk tolerance. What rocks you might sink another. Here's to navigating the stormiest of tech stock tides with smart questions and informed decisions. Stay savvy and dive deep into your due diligence before making moves. What a dramatic day on the tech stock roller coaster. From AppLovin dodging lawsuit lightning bolts over alleged data trickery to CrowdStrike embroiled in financial mystery involving the IRS, it's been an adrenaline-fueled session. Meanwhile, Telesat is gearing up for a significant financial reveal, promising to keep us all on the edge with its satellite innovations. And VEON swam the headlines with a mega partnership, reinforcing Ukraine's connectivity backbone. With so much financial windsurfing and strategic steering in the tech world, investors are definitely in for an interesting ride. If you've enjoyed this breakdown, smash that like button, subscribe for daily tech scoops, and share the video if you found it piquant and enlightening. Circle back on Monday for more tech news and updates, and until then, have a fantastic weekend. Stay savvy, tech explorers.